So we have Ashwin Patil with us, Head of Fundamental Research, LKP, to speak to us about these numbers. Ashwin, first take on Tata Motors numbers. Of course, the profit after tax is distorted, but give us a sense, firstly, on the top line. How are you viewing that number, that 13.5% shrink? Was that something that you had penciled in?
Well, the numbers, the PV side of Tata Motors has always been seeing some sort of pressure considering the domestic and the JLR contributions to the top line of PVs. Now that, both the businesses have been separated, we are getting a clear view of exactly where the PV stands and where the CV stands. So, if you look at PV per se, then definitely we have been, seeing that, the numbers are not really very much heartening. And, the company is facing pressure in the JLR markets because the demand situation in Europe and then China is not really very great. And also, if you look at the domestic PV numbers, there is a lot of pressure from the likes of Mahindra and Mahindra. The competitive intensity, is quite strong in India. And therefore, if now that things have got separated, we can have a proper clear view on where the passenger vehicle numbers stand. And therefore, looking at this is the first quarter that we have seen the complete picture of passenger vehicles, how they have performed. And therefore, I think that despite festive cheer in India, the GST rate reforms which have happened in Q2, still, these numbers are not really, that great. We were not expecting such kind of numbers up to this extent. I mean, a little decline was expected at the top line, but 13% decline, was not expected. If you go down, then definitely EBITDA is also not looking great. Also, there are these huge one-offs. So, looking at the PAT, taking out these one-offs, still, from the top to the bottom itself, the numbers are not looking great at all.
Okay. Ashwin, so yes, I get a sense that you're disappointed with the top line as well as the EBITDA number. I'm trying to get a feel of how much of that top line has impacted EBITDA and how much otherwise, how much inefficiency is building in on the cost side that is impacting EBITDA. So one is, of course, the top line impacting EBITDA. I understand there's a large miss there. But what about the cost side of things? Are they able to control costs? So have they done relatively better standalone on the cost side?
That will be able to, fathom only when the con call happens in the evening. But prima facie, what I think is that, the discounting has been a little bit more, and therefore the operating leverage was on the negative side, which impacted their EBITDA as well as the EBITDA margins, at that level. And the top line also added to the pressure, considering, the competitive intensity. And also on EBITDA side, the RM pressure also was slightly there in this quarter. The discounting was there, and that, the brand building, the brand building expenses also were there in India, as well as, in the pressure on the cost that we have seen in the European as well as the Chinese markets over there. So overall, if you see, then both the markets in India as well as in the European and the overall exports for JLR have been not really, that factor is weighing a lot on the overall margin performance at the EBITDA level.
Okay, the free cash outflow, which is supposed to be nil, is now penciled in at 2 to 2.2 billion negative. That's the JLR guidance with regard to free cash flow. How much of a concern is that, Ashwin?
Well, that has always been one of the concerns because, every quarter the company has been giving such kind of guidance. Even last quarter, what they had said, and they had reduced, the EBIT margin guidance in last quarter for JLR. So all these factors are leading to such kind of free cash flow negativity, and I think that a lot of capex also the company has been building up, on the JLR front, and a lot of big expenses in the European side. So I think that is one of the factor that is impacting the cash flows as well.
And why is that so, Ashwin? Is that only because the business in Europe isn't as strong as it used to be? And US, in fact, JLR's entire production setup is sitting out of the UK. So you've not got the India tariff impact coming in on that. So give us a sense of what's playing out there.
See, well, I think that the branding and the new launches in the European markets are not getting that kind of a response over there, and overall the top line is getting impacted. And if you look at the expenses as well, the expenses are quite high over there. Since in India you get labor at a cheap rate, but since the production is entirely happening at UK, they are not getting that cost advantage over there, and adding to that, the capex and lot of expenses, and the demand over there is quite weak as such, and therefore still despite having very less impact of US tariffs over there, I think still these factors are playing a lot on them.
Of course, profitability, Ashwin, not really the metric that you would judge this result by, of course. But what next? I mean, what are you penciling in from the call? What is it that you want to, what are the key points that you will look out for from the con call today evening? Because this will be a crucial con call. Firstly, it's the standalone PV business for the first time. And secondly, you want to understand as to all of the moving parts and what is really impacting the business. So give us those 2-3 key pieces that you look out for.
Well, we need to see how the demand is panning out in the domestic markets. Though this October, November, December, this Q3 quarter is expected to be very good, as overall the industry is having a cheer because of the GST reforms, etc. And where is Tata Motors PV placed in the overall scenario for the domestic PV? That one factor we need to see whether the demand is going to get sustained over the longer term, because on the two-wheeler side today there was Hero's call, and they had said that the demand is going to get sustained over a longer term, like about 2 to 3 years. So whether on the passenger vehicle side, Tata Motors as such, what kind of market share gain are they going to expect going forward, and what kind of new launches they are bringing to take on the competition head on. So these factors on the domestic side and on the JLR side, I think that similarly, how are they going to tackle each geography, because each geography is playing out differently. So how is the demand going to pan out in the European markets, and how China is going to play out over there, and the new launches and the cost optimization as well as the operating leverage, what kind of these things, and also on the capex front, what kind of capex are they going to outlay, and also on the free cash flow front also, what kind of whether amount they are penciling down for the free cash flow. What kind of how is the negativity going to get reduced on the free cash flow side? There are many questions that we need to get answered today on the standalone PV side as such.
Doesn't look pretty, Ashwin. I'm gonna end this conversation, but of course, come Monday, it's not looking like a very pretty picture in terms of analysis right off the bat, prima facie, where Tata Motors PV is concerned. Thanks so much, Ashwin, for joining us this afternoon on short notice. Tata Motors PV numbers, while there's that very strong, huge profit which is being seen on the PAT count,